All right. All right, guys. What is going on? What is Gucci gang chat? What is Gucci? What is Gucci? All right. Our levels should be good to go. Cool, cool, cool. All right. What's good? Capitalists, Eric Marshall, excuse me, Adam Tordy, 2020. Had to come and change name, but first stream as a member. What? What are we talking about here? Big James, Eberneth, Devin, Washington, or Devon Washington, however you pronounce it, was good. Monkey Slowly, I think you say that. Jorks Patch. A lot of people on early today. What happened yesterday? Everyone showed up late yesterday. That's the weekend slumps, huh? You guys had such a good time this weekend. You were late on Monday. Is that what we're doing? Is that how we roll, chat? Man. Listen. I know we pick up the habits of people that we hang around. And you guys clearly have been hanging around a lot if you've picked up my bad habit of sleeping in. You're here too much. You're here too much. Maybe slow it down. Was good, Sean? First stream back as a dad. Well, congratulations, Jordan LeSavage. I'm going to pin that. We got another dad in the chat. Willow hasn't been here in a little while. I did reach out to him the other day. All is well. All is well. But Willow's a recent dad too, I think. So that's great. Big congratulations. Pat said, I can't sleep in. My body won't allow it. Well, that's good. That is good. I've never had that issue. Or I've never had that. I've never had that. I'm pretty sure I've just had sleep apnea my entire life. I was probably born with sleep apnea. You know what I mean? So, what can you do? What can you do, chat? What can you do? Someone on Instagram said don't skip leg day, and I agree. I agree. I feel like we're going to get another leg lower here for ES. But I'm glad I was done earlier today because I really don't care for where we are now. Although I do think this is going to trade lower. But if we do not, I won't be shocked. I won't be shocked. Okay, so we'll talk about a few things. We'll go over some stuff as per usual. And then if you guys have questions, you can ask them. So, all right, so what should we start with today? I will start with the images that I shared in the Discord. So that way we all kind of understand what the thought process was this morning. Yeah, we'll do that. So we'll do ES first. Okay, you guys can all see that, right? So if we come back to the basics, right? Was good, Mitchell? If we come back to the basics, right? Low resistant highs versus high resistant highs. What is the difference, chat? Who knows? 45 of you on here. Most of you are probably members. Chat's still not open because I said so. But yeah, what is the difference? If I was new and I said, hey, what's the difference between low resistant highs and high resistant highs? Like, what does that mean? Talk to me like I'm 5. I'm 5 years old, learning how to trade. Right? What's the difference? High resistant highs, low resistant highs. What are their characteristics? Which one is a stop loss? Which one is a target? Kind of giving you some answers here. Let's put our thinking caps on this morning. Or this afternoon. Sorry, it is the afternoon now. Pat said, excuse me. Man, this weather. My gosh. Low resistant highs is a target. High resistant highs is manipulation. Okay. I can get with that. But what is high resistant highs? What is low resistant highs? How do we define that? How do we define, right? What's the definition here? You have high resistant lows on the chart. You have a soup on the chart, rather. You have both. They can be both. You have low resistant highs on the chart too. Okay, so the difference. Okay, here we go. Martin said, Martin said low resistant highs. The high on the right is lower. Low resistant highs. The highs on the right, or the high on the right, is lower. He said, and the opposite. Yeah, you're fired and blocked for that one. for the opposite. Don't be lazy. But anyway, this computer's getting too old, man. It's too old. These are low resistant highs. Low resistant highs. There's usually two, like one high and then a high on the right that's slightly lower. Yes. Now, in this case, when you have a series of like two, like these are equal highs right here, but let's say all of these together, we have a slightly lower high here, right? Like, this is an image. We can actually zoom in. Like those highs, right? We have a slightly lower high here and then a slightly lower high here. So we could just put all that together. Just put it all in the basket. Okay. So then, as always, I mark the highest one, whichever the highest one is. Okay. So whenever we have that, all right, and I put these notes in here for you. I already know this, but I'm giving you notes. I'm giving you charts. So that way you understand when you see this in real time, or like, let's say before the market gets there, like when we're down here or selling off rather too, whatever the case, you have to see that and you have to realize like, bro, the market doesn't make highs like this. Not usually. The markets like they don't top out like that. They just don't. Okay. And a move like that is typically going to be short-lived, which means it might be left open for a little bit, but the it's going to come back for that. It's going to generate liquidity, sweep liquidity, soup here, and then trade higher. Does that make sense? So we all on the same page so far? Drop some ones in the chat if we're all on the same page so far. The difference is low resistant highs, where you have a high or another high, like in a series, that are slightly lower. That is low resistant highs, which means it's in the fucking name, low resistant high. There should be almost no real resistance. It should very easily go higher. It should not, mess around, consolidate, it should have an easy time getting up there. That's why it's called low resistant highs. Okay, there's nothing that the market is offering that's going to send price lower. It's not going to do it. Okay, high resistant highs, the market does make highs like that. So let's investigate. Right? Hindsight here. Going over the same ideas that I've told you for years. Okay, so here's some fucking hindsight for you. Those highs, right, cleared here. Wonderful. 951. Right? 950. Oh, interesting time here, right? So, anyway. Then we trade higher around 1004. Okay. As well. Also interesting, right? The market is untimable. Nobody ever knows how to time it. Nobody can time the market. Nobody can time the market. Okay, so there's your 10 a.m. macro. That doesn't exist, right? And we get a soup. You see that? Markets don't make highs like this. They do make highs like this. Make sense? So not only do we get high resistant highs, but it's a soup. It is a higher high here on market. I got so many books laying around here. I gotta clean off my desk. Right here, boom. Okay. There's your high, right? We do trade lower, and then bam, higher high, and then look at here. We trade lower, and we leave behind an imbalance, and then we trade right into that and lower. You see how that works? So there you have it. There you have it on this chart, okay? I'm going to shorten it. Low resistant highs, target, right? Markets do not make highs like that. We'll go like 20. Oh, shit. We'll do 28. That's fine. Okay. And then we'll do high resistant highs, which is not so much a target at the moment as much as it is a stop loss placement. Did y'all see that lag there? That was weird. So with soup, all right, that term came from Street Smarts, from Linda Raschke and Lawrence Connors. I think Larry Williams is in there, and there's another dude in there too. And that is basically a jab at Richard Dennis and the Turtle Trader, saying like, hey, you fucking suck because your win rate is like 15-20% or something. Because that idea is the Turtle Traders are buying a 20-day breakout, or they're shorting a 20-day breakout, and they always get raped basically. And sorry for my language, there's no better term for it. Like, they're getting absolutely wrecked. The times that it does work, it is enough to, when you hold your winners, outdo your losses. Cool. So in that book, they're kind of like making fun of the Turtle Traders, saying, hey, this is turtle soup. It's getting the breakout traders in and then railroading them in another direction. So it's like, oh, if this was a daily chart, it'd be like, oh yeah, in the last 20 days, here's the lowest low. In the last 20 days, like, we're not going to count candles, but like, let's say this was it. It's like, oh, we're going to buy that. So the Turtle Traders would buy that, and then when the market trades lower, like, they would get wrecked, like big time. You know what I mean? So that was based on, I think, a 20-day higher low. I could be wrong. I mean, I haven't read that book in such a long time. Okay, you can read it if you want to. I'm sure you can acquire it somehow. But it's in there, okay? So, and look, I'm always going to give credit where credit is due, okay? Just like I shared my friend being number 9 on fucking TradingView. Out of 80-something thousand people, my friend who I grew up with as a trader is number 9 on the fucking leaderboard. Badass, right? So with that being said, it was ICT who saw that, right? Who's like, oh, turtle soup, like that's interesting. And then went into the smaller time frames and sort of like it's tipping the hat to Linda Raschke and Lawrence Connors to say, hey, I like the idea in the name of turtle soup. But I'm going to take that idea from that daily time frame based on a 20-day breakout, and I'm going to go to the smaller time frames with it. So that's why like smaller time frame stuff is still considered turtle soup, but not in the traditional sense. Okay, so there's a fucking history lesson for you, some trading history. Okay, cool. So now you know. But so turtle soup basically is manipulation. Okay, it is to the extent that I know it, it is a higher high above an old high or above old highs, or like in this case, this is a soup right here. We have a low, right? Equities open low, by the way, right there. And then we get a stab at 930. Excuse me. And another stab right here. So there is your lower low below an old low, right? So look at how these markets operate. Soup at the low, 50% of regular trading hours gap, by the way, totally random, right? Totally random. Okay, all the demand came in here, right? Right at that random 50% level. Interesting. Turtle soup set the low. Turtle soup set the high. And it was inside the macro for the reversal lower. And here we are now. Okay. And that's what I'm saying. That's why I said earlier, like, I don't like where we're at. Like, I don't like what we've done today. Because even though we have seen really good movements and we've seen, you know, the same shit work over and over again, you know, previous day high, previous day lows and all that kind of stuff, we're seeing the concept still work. The issue that I have with this here is these moves are not like sustained. They'll make a new low, get back in the range. They'll make a higher high, get back in the range. Lower low, right? Even taking out Monday's, let's say, final hour and like PM session low here, right? At like right before lunch, it does take that, but it leaves those lows open. So same thing, it takes a low, gets back into the range. And now we're literally in the middle of today's range and a little bit above the midpoint of our opening range gap in regular trading hours. So this is hard to trade for me. I don't know about you, but I have no problem admitting this is hard to trade. Because now it's like, I don't know if the low's been set. I don't know if the high's been set. I don't know. I would have much rather seen this go lower for the lows. So hopefully that answers your question. Adam says there's liquidity everywhere, like external highs and internal liquidity. How do I know what will the market reach for when I first hop on before the market open? So Adam, what I'm going to tell you is top-down analysis. Okay. Always top-down analysis. The easiest time to do top-down is the weekend. Again, this is just my personal opinion. I can't speak for everybody. I can speak for myself. Top-down analysis is easily done on the weekend because the markets are not open. You have no, you know, there's no trade management. There's no impatience or anxiety to try and get into a trade because like at least the futures market is not open, right? So we can actually, you know, breathe, we can have some patience and look at the weekly and daily, you know, and get a storyline here, get some price levels, get some higher time frame concepts. Once we have those, then like you said, like when you get to the chart and it's Monday morning or Tuesday morning or whatever weekday morning or afternoon, and you get to the charts and it's like, okay, are we trading towards higher time frame liquidity? Are we trading towards a higher time frame imbalance? You know, whatever the case may be, then you know what it's likely to trade to. Okay. What I think today is likely to trade to, again, it's still hard to tell here, but based on what I think, I'm just going to continue with what I said yesterday. Right? These lows down here to me are very clean. We may not do that. We may trade higher, and I could be wrong in that. Which is why when I identify, let's say, a condition like today, like at least here, for example, not this morning, but like here, this to me is a condition where I am more likely to be wrong than I am to be right. I'm more likely going to take a losing trade versus a winning trade if I trade this right here. Does that make sense? So when I see a condition like that, there's no trade to be taken. Or, you know, if you just really can't not trade, then it's like, okay, go in with the very smallest amount then, like 1 micro contract, you know, just to like be able to do something. I don't recommend doing that. Obviously, it's a very bad habit, but if you're going to trade a really awful condition in your opinion, then at least just do it with really, really low leverage. So if you take a loss, it won't hurt you all that much. You'll still feel like a fucking dumbass, but you know, you won't lose a lot. So yeah, hopefully that answers your question. We go to the daily, right? I don't know if you were here yesterday. I don't know if you were here yesterday, but we had walked through a few different things. We talked about some higher time frame concepts for ES. We definitely talked about some higher time frame concepts for NQ as an example. We talked about this gap from November 7th to the 10th. We talked about actually pretty extensively. We looked at, you know, how that was utilized to go lower. Once we trade through that, we're likely to utilize that to go higher, right? So when price is in there, when price is going down, right, we actually opened lower and then got a soup, then you start seeing like, okay, we took out traders, rebalance price at the same time, smart money efficiency, right? Then you can start going, okay, higher time frames are being respected. What's it likely to reach for? We have this gap, and then we have Friday's high, right? And then inevitably, what do? We don't actually get Friday's high yesterday, but that's not to say you still can't take good trades in there. You know what I mean? So we're either trading towards higher time frame concepts or like away from higher time frame concepts, if you think about it. Does that make sense? I hope it does. Let me give you some more context. Let me give you some more juice. You guys want some more juice? Do y'all want some more juice, chat? Actually, let me show you the image one more time. I feel like that's a little bit easier. Okay, you remember this, right? We just went over this. When the market traded down here, right around like 930 something, 932 or whatever, right here, we can clearly see the market making a lower low, right? We can all see that. That is a low. That is a lower low. Easy. At the same exact time, right? Like 932 or whatever it was here. See? Is NQ doing the same thing? It is in part, and it's not in part. Meaning, is it making a lower low? Yes, it is. It is making a lower low in comparison with the same low on ES, right? That by definition is a lower low. But look, it's not trading below this low. See that? It's not trading into its opening range gap. It's definitely not reaching 50%. You see what I'm saying? So our equity's open to right around that 930, 935 here. NQ is higher. And it also left low resistant highs. The markets don't make highs like this. The markets don't top out like that. Okay? So that means we're likely to reach for those. And NQ, right? Once that low was set, we take off, retracement, bang. Easy. You see what I'm saying? Yes, right? Let's come back, okay? Yesterday, we're already here on NQ. Okay. Look at yesterday. If we take everything away, look at this gap here, right? And look what Monday's candle did. Monday's candle, weekly open as well, trades down and into that and closes off a bit. So what can we reasonably expect today? Based off of the close yesterday, what can we anticipate for today? What is likely to happen today, right? The next candle. We're not reacting. We are predicting, right? It can't be done, but we're doing it. All right. We are predicting. We're not always going to be right. Okay. We're thinking in probabilities, not absolutes here. Okay. Thank you, Mark Douglas. We can anticipate reasonably based on a higher time frame, right? Based on the daily, that we are likely going to see expansion higher. Okay. So if the daily, because I don't remember what the weekly has on it, but the daily rather, if we can anticipate higher pricing, well then guess what? We can go down to the smaller time frame and then look for higher pricing. Okay? And that was right here. Even though, again, it was short-lived, because we did end up trading into that gap later. But at this particular time, ES was lower, NQ was higher, and we had these highs in here. So in the short term, meaning like in the next 30 minutes, maybe an hour, a couple hours, like it's not short to go lower, but I'm saying a short amount of time, okay? Then this is in alignment with higher time frames. Okay? So that's easy, simple, top-down analysis. There's nothing that's like super ridiculous about this. All we've talked about is gaps, imbalances, opening range gap, which you can easily see on the regular trading hours. And we talked briefly on macros, right? 951 set the high of the day. Macros that don't exist, yet they still are printing high of the day. Crazy. Crazy shit. It's magic. So it's not, Adam, it's not just about like, there is liquidity everywhere, right? So which one is it? Or let's say an imbalance, right? Which I don't really consider to be liquidity. It's really an inefficiency, but whatever. We don't need to sit here and argue about definitions, but whatever price is likely to reach for on a higher time frame, if we can get that same directional bias on a smaller time frame, then we have alignment. Okay? Now we're good to go for a high probability trade. Doesn't mean it's perfect. Doesn't mean it's 100% win rate. Doesn't mean, you know, that you're going to pass a combine in 3 trades. Okay? It's not that at all. It's finding high probability setups. A quality setup, not a quantity of setups. Anybody can take a quantity of setups. You can trade every 1 minute candle if you want. I don't recommend that, but you could. I don't want to do that. I want to find 1 or 2 good setups, good directional bias, right? If we have these highs and we just got souped, right? I want to be looking for long. Some of you traded down here. Wonderful. I didn't. I traded like this right here. So it was more of a scalp for me, which is fine. I'm fine with that. What I really wanted to do was short, but I didn't. And I can tell you for a fact, this probably would have got me out, because we ripped ass all the way down here. We make a new low and we take Monday's low here, and that right there is only like another 6 or 7 points for that sell side. I would have immediately thought like, oh yeah, that sell side is probably going to get yanked, and then it comes all the way back up here, and so I would have been stopped out in profit on the way up, and then I would have got not mad, but I'd been like, that's bullshit. You know, weak markets don't retrace this deep. They just don't. So anyway, let me catch up with the chat, because I have not read everything. You mean this Monday would be the start of the week? Oh, you said weekend. Oh, see, I got to read. Do you mark up all the imbalances on the daily and see which one reacts? No. No, I don't. Whatever the next available one is. Why would I be worried about, you know, a level that's like 200 points away today? I'm not. The high today was set perfectly around 75% of the gap from the 27th. Oh, good observation, too. I've been marking up, excuse me, previous day lows, waiting for it to get taken and then go higher. So there is liquidity at previous day's highs and lows. There's always going to be liquidity there for sure. But that's only one piece to the puzzle. What you should do is go watch, I have a video on this. I don't know I forget what it's called, but it has a blue thumbnail with an eyeball on it. And this was from a few years ago. Y'all might know what I'm talking about. It's got to be in a playlist somewhere too. You know, you got a lot of videos when you can't even find the one that you're looking for. We need a table of contents or something. Yeah, because I really don't remember what the title even was. Let me see. Oh, yep, there it is. Funny enough. Okay, if you go to the membership tab, because you are a member, if you go to the membership tab, for me, it says highlighted content for members, and it's got some videos like the MMXM masterclass, the mitigation model, how to find the high of the day. Oh, that's definitely a good one. There's one called Liquidity. Right here. Do you see that? It's called Liquidity with this blue eye right there. You should watch that. It's a couple years old. Doesn't mean it's old, but liquidity is everywhere. Previous session high and low, previous day high and low. You know, lunch high and low, PM session high and low, AM session high and low, stuff like that. And I can see how it would be confusing to, you know, figure out which one is it. I don't always know, bro. Okay. But this is why we wait for high probability setups with at the right time, with the right price and the right context. The law of high probability. So again, it's not to say that previous day high and low like is enough. It's not. Because sometimes we can still take a previous day low and then keep going lower, or take a previous day high and keep going higher. You know what I mean? So that's why we need a little bit more information than that. That low before it took the high was set at the first presentation, right? I didn't really mark up any first presentations, to be honest with you. But this is very similar to 1, 2, 3 formation as well. But I don't know. 835. Ugh. This all kind of sucks. The first presentation is actually like a suspension block right there. That's the first, right? Because we have a lot of wickage here, right? We have like, I believe this is called an immediate rebalance right here. We have an imbalance here, but we have gaps too, so that makes that a suspension block. And that is exactly where price made a low to go higher. So again, supply and demand, right? All the demand came in right at that suspension block perfectly to go higher, because everybody in the world knows about suspension blocks, right? Hey, it's cool. But that, I think, is the first presentation, not the low. Make sense? So I really wish I would have looked at that. I did not. I was focusing a lot on ES and not as much on NQ. So yeah, that's where we're at today. So did you guys get some value today so far, or what? I didn't realize it's been 40 minutes already. Drop some twos if you guys got some value today. If you learned something today, or if I was able to help you look at something that you may have overlooked, or didn't even bother looking at, or didn't even know that you could look for it, then drop a 2 in the chat. Like understanding 950, right, set the high, or we didn't get a macro to set the low, but we did get a macro to set the high. Like, shit's fucking important. This shit is important, dude. Bigly. Excited to backtest. See, that's what I like to hear. That's what I like to hear. Excited to do the work. Don't lose that excitement. Okay? Don't lose your coachability. The day you lose your coachability, you're done. It's downhill from there. Once you stop improving, once you start progressing, you start regressing. So don't forget that. Do I mainly enter on macros? Not always. Not always. I would say there's really, really great entries during the macro time windows, and there is great TPs in those time windows, especially the ones that are in the final hour. The final hour has 4 of them. The 2 and the 3, right? The top of the hour. Regular macros, those are the 2. And then the other one, 215 to 245, is that 30-minute, the only 30-minute macro. And then the MOC, the final 10 minutes. Those are usually really good for price hitting levels of liquidity or higher time frame concepts. Haven't looked at suspension blocks, what are the best ways to spot them? Time of day, how many up or down candles with gaps can be included? My goodness gracious. What a hell of a question. I'm not disappointed. I'm just tired. I'm not really tired. I just am not fully awake yet. But I've been trying to get in the habit of waking up early. Okay. So I've been waking up early and I've been tired. So there you have it. I have a video on this. It's called Suspension Block Review. All right. Normally, when we look at an imbalance, it's like that. Right? It's from, we have a single candle that extends either higher or lower. And the candle on the right, it's low, right? That's where that is anchored to. It would be that, right? Right there. And it would typically be anchored to the candle on the left's high, like something like that. You see what I'm saying? So that is the parameters of what a normal imbalance would be. In the case of a suspension block, again, it ain't mine, okay? What ICT calls a volume imbalance, I just call it a gap, okay? When there is a gap at both ends, not just one, both, okay? We have a gap higher and a gap higher. So when we have that, it's no longer this gray box that we've analyzed, you know, like a normal imbalance. That would no longer be the case. It would be including the gaps, which is why I make them blue, to differentiate between an imbalance. An imbalance is usually gray on my chart, or it's purple if it's an inversion. A suspension block on my chart is going to be blue. Bullish or bearish, it doesn't matter. The suspension is going to be blue. Make sense? So I see them on the 1 minute. They're probably going to be on the 2 minute. I've seen them on the 5 minute as well. Just like every other concept, I'm sure that it's what's the word I'm looking for? Fractal, meaning what happens on one time frame happens on all time frames. So, you know, you can look at suspensions on every time frame. So I say this all the time. You can listen to me all you want. You can listen to anybody else. You can listen to everybody. You can listen to whoever you want to. You will learn more from self-discovery. You will learn more on your own time, studying your own charts and your own results than you would from anybody else. I can point to things that nobody else ever taught you. I know I pride myself on that. I know I teach you guys a lot of shit nobody else did. That's why I do it. And I love it. And that's why I don't mind saying it too, because I know it's the fucking truth, baby. But I do give credit to who I learned from. So it's fine. But I can point you to things, okay? You may not like them. You may think they're stupid. I have students like that. Oh, this is stupid. That's stupid. You can think whatever you want. You can literally think whatever you want. I don't care. But it's up to you to learn to trust this stuff. It's up to you to trust the divergence or the suspension, or let's say, actually there's a divergence here because that was a soup on ES. That soup, right? Being able to trust that soup as a stop loss to short to go lower. You might not like turtle soup. You might not like imbalances. You know, I don't know what you like, okay? You're gonna like whatever you want. You're gonna trust whatever you want. But at the end of the day, you will learn more on your own and learn to trust it on your own versus like being here and watching streams and stuff. Okay? So I can tell you what work to do, but I cannot do the work for you. Okay? I can tell you to print charts. I cannot print the chart for you. I can print my own charts. I can't print yours. Make sense? So as far as what I know, a suspension block and the imbalance are still both a 3 candle, we'll say, formation. Okay, just for sake of language parameters, we'll say an imbalance takes 3 candles, a suspension block takes 3 candles. Okay, as far as I know, that's what I know. Okay, so as far as my understanding of price, that's what I'm going with. Can we anticipate a rebalance to then take the next day high if we align with higher time frame? I don't know. I don't know. That, again, that depends on what you're trading and also the timing of it. You know, day of week phenomenon. Like, it's going to be different if price trades into a higher concept on Monday or Tuesday versus a Thursday or Friday. It's different. It's a different day of the week. You know what I mean? Or let's say day of the month, right? Yesterday was December 1st. So we have like a monthly open as well. You know what I mean? That can be different too. That can throw some things off too. Have you ever heard of trap candles? Yeah, I have heard of them. I don't know what that is. I don't know what that is. Probably the candle that traps traders, I guess. But I don't know. So anyway, we've done nothing on this stream. Look at this. We have stayed inside right around this 50% of our opening range gap. So, although again, I still would want lower pricing. I told you earlier, this is a condition where I know I have a much higher probability of being wrong. So we still may not go lower. And if guess what? If our second stage is supposed to be fast and dirty and it's not, well, then if it's not going to go lower, what else is it going to do? Either consolidate or go higher. So probably best if I do not trade. Make sense? Maybe when you listen to trap music, you see trap candles. Yep. Blocked. Blocked. Yeah, you're probably the first. You probably should get a trophy for being the member that got blocked the fastest. I don't think I've ever blocked a bronze member before, but here we are. First time for everything, I guess. But anyway, that's going to be it. I have nothing else for you. Okay? You have things to study. You have things to look for. We've talked about turtle soup. We've talked about the divergences. We've talked about higher time frame analysis. We've talked about targets and stop loss placements, you know, liquidity, a lot of things. So that's all I got. Yeah, so, yeah, you better. And end up like some other members and get fucking banned, you know what I'm saying? So, all right, we'll be here Wednesday, tomorrow, same time, same place, as always, the same price, baby, for the free. All right, don't do anything stupid between now and then.